We're joined today by Andrew Radonjic, Managing Director of Venture Minerals. Andrew, thanks for your time.
How are you, David?
Tin in Tassie.
Yes.
You've got a very interesting tin project. Tell us about it.
Well, for people who followed the venture story in the past, they'll be no strangers to us doing the tin story back at Mount Lindsay. We were there in 2007. We spent $35 million on that project, which culminated in a feasibility study, a BFS in 2012 on a big open pit. And we were going to mine something like 13 million tonnes from that, 1 million tonnes underground at the bottom of the pit. But we've changed, I suppose, since then. The tin price did come off, it was as low as 13,000 back in 2016. So there's a bit of a hiatus there, but we sort of dusted the project off again in 2018 when the tin price went to 20,000. And we thought, well, what are the two biggest challenges at Mount Lindsay? One is permitting. Permitting an open pit in Tasmania is a challenge, and raising $200 million to build a plant, the big 1.75 million tonne per annum plant for the open pit, was a hefty exercise, and especially when you had a $10 or $15 million market cap. So we've gone, I suppose, switched completely to underground now. Remember, we do have hydropower going past our doorstep. That still exists. We'll go underground. We'll put all the tailings back down the hole. So virtually we'll be left with, instead of having a 200 hectare footprint, it'll be down to 50 for a short time. We've got a temporary tails dam whilst we're creating the voids, and then we'll put it all back down the hole. So virtually there'll be nothing. It'll be all rehabilitated should there be no more discoveries down there. But there's an 8-year mine life, 500,000 tonne per annum, and we could see capex of more like $50 to $60 million, much more affordable for a company of our size. So that was the big switch. Besides that, the tin price has gone absolutely ballistic in the last 12 months.
What's the plan with the project?
Well, the plan is for us to produce ESG compliant tin. That's at this stage we've just started redoing the new feasibility. We've withdrawn the open pit permit. We've now submitted an underground mine as a permit, and that'll take probably a couple of years to run its course. So in the meantime, we're collecting more sample to try a much simpler processing, more gravity-focused processing technique. So we've just about finished all that feasibility drilling. So that about 10 tonne of sample we'll get. We'll put that through the test work. We'll do a proper full-scale underground mine design. And so in about 9 months' time, you'll see a PFS pop up, and then the market will be able to start valuing it and doing it. Like I said, instead of being $20,000 a tonne, $23,000 back in 2012, we'll be using numbers with a 4 in front of it. So optimising that and giving the market new numbers will be the main focus over that period of time. But at the same time, we know there's huge exploration potential. We're a long strike from Renison Bell, and we drilled only 2 targets out of our 48 targets, and we come up with some pretty exciting alteration zones. And we know we're near some probably all-grade mineralisation, so we'll be back drilling holes, probably next month. We'll have probably not 1 rig, but we'll ramp it up to 2 rigs and hit that pretty hard.
And you've got what you call your free kick iron ore project, advanced, ready to go. What would you be waiting for?
Well, we got the first shipment out, so we've commissioned the whole process. We even got paid. Great bonus. We chose an offtake partner who stood by us during, falling iron ore price. So we know all the costs, and we know a method that we've been working on, and we trialled that during the last bit of that phase, that we can do dry screening, we can get it up and running. So I can get on the phone and basically get a mobile crushing screening plant on site next week, and we can start working. We've already got 15,000 tonnes mined, that's a third of a ship. So we've got a strategy where it's going to be a quick restart strategy, and there's about 5 shipments there we could rip out quite quickly. So if the iron ore price does pop up for any reason, such as COVID and the Pilbara outbreak up there, and post-Olympic Games ramp up in China, then we're very well positioned because we've already gone through the process. We know the costs, and but it's that some people ask me, what is the price you need? It's not an easy answer because we've got a 57 product. We're badged against FMG Super Special Fines. They have a monthly discount. It's currently 35%. That discount number needs to go down. The price needs to go up. And the shipping, well, it's currently in the high 30s, pretty similar to what we did before. But if we, for example, did it when we booked it, we'd be making $30 a tonne, which is about 1.5 million tonnes of shipment. So we're getting closer, but there's still a little bit of, there's an opportunity there, and like you said, it's free kick. So we'll sit there, we're ready, and ready to ramp it up very, very quickly.
The other free kick you've got is your Chalice joint venture. They're doing
That's right.
all the work. You're looking for the benefit. How's that progressing?
Took a while to get some traction because of the break we had with the weather, doing EM surveys down there in near Manjum up in the southwest of WA. But they got onto the ground. They needed to get that work done. Spent $300,000 by the end of November. They've achieved that, and from that work came 11 bedrock conductors. And we put a release out last month, but when you plot them up, we had 3 of our 5 holes were within almost inches or metres of intersecting those bedrock plates. So in fact, our 2.5 metre massive sulphate intersection was right on the edge of the plate where we got a little bit of copper, 0.5% copper, 0.05 nickel, 0.04 cobalt, and a little bit of palladium. So we're pretty excited. They have to get on the ground and drill those holes. So at the moment they're doing the soils to verify, prioritise those targets, but they've got $800,000 to spend before the end of July, and that really means drilling, and they've said that in their quarterly report. And the interesting part about that is drilling in the state forest, as they would know, during winter is a no-no, so they've got probably till June to get it done. So these sort of, March, April, May, June is the rig's got to go and fire up, and that's going to be a pretty maiden drilling by Chalice on our ground on the Julimar lookalike, as they said. It's a great free kick for Venture and its shareholders. 2
free kicks and a really interesting and advancing tin project. Exciting times ahead for Venture and its shareholders. Andrew, thanks for your time.
Yeah, thanks again, Dave.